Hey guys, I want to show you how to use fair value gaps to trade, and this is the simplest way to trade. If you are a beginner and you are struggling, you can try this method and then see if you can get something from the market. So if we have a trend or a bias, so here I'm having a bullish bias. So when you're having a bullish bias, normally the market looks something like that. Yeah, like that. So when you look at this market, this is a higher high, this is higher low, higher high, higher low, and then higher high. So here we are having a break of structure. This one is a break of structure. Also, we have another break of structure here. Here, we have another break of structure like that. So when you look at this market, normally when there is a break of structure, this movement that breaks the structure normally has a very high momentum. When I say very high momentum, it comes faster. It moves. The price moves faster during that time. So in this movement, either this one or this one here, normally there are imbalances that are left behind. So what the market does, it comes back to retrace into those imbalances. We say that it is coming to fill them and then continue with the direction it was going. So here we are having normally we have two types of imbalances in the market. The first imbalance in the market that we have is called the fair value gaps, and that is what we are going to use in our strategy. And then the second is called breakaway gaps. Breakaway gaps. So we only have two types of imbalances in the market. So when we have fair value gap, normally the price comes to the fair value gap and then continue the direction. Normally breakaway gaps, the price do not retrace to the breakaway gaps. Maybe until it sweeps the liquidity before coming back to the breakaway gaps. But here we are focusing on fair value gaps. I hope you are together. So for example here, when we have an imbalance here, let's say we have an imbalance here, something like this. The market moved from here to here and then it came back to retrace inside the imbalance, which is fair value gap. This is fair value gap, and then it continues with the direction where it was going. The same thing, it will reach here and then come back again to retrace somewhere here and then continue with the bias. So I want to look at a candlestick pattern here to try and give us an idea on what we are talking about. So normally fair value gaps is formed when we are having three candlestick pattern. So this is candlestick number one. We are looking at the bearish bias. So this is candlestick number one, and then we have this one here is number two, and then we have this one here is number three, like that. So we have candlestick number one, number two, number three. When you look at candlestick number one, normally it is not that large, but candlestick number two, it normally undergoes expansion. It is a long candlestick, and that is the candlestick that normally leaves behind the imbalances. So we have candlestick number, when you look at candlestick number two, it closes above candlestick number one. And then we look at candlestick number three. Candlestick number three can either close above candlestick number two or below candlestick number two. But where do we find the imbalances? When the wick of candlestick number one does not meet with the wick of the candlestick number three, then we are forming an imbalance here. When we have candlestick number 3 closing below candlestick number 2, this is most likely to give us a chance for the price to come back here inside the fair value gap and then continues with the direction. So whatever we have formed here, that is giving me a lot of trouble there, it will come back here and then continue with the direction. So here we have this one, here is the fair value gap, this is the FVG. So the price will come back, fill the fair value gap, which is the imbalance, and then continue with the direction. The same thing will happen with the bullish. When you look at the bullish, we have candlestick number 1 here. This is number 1, this is number 2, and then this is number 3 here. Number 3, not number 2. You have candlestick number 3 here, like that. So when you look candlestick number 3, number 2 closes above number 1, and then it is an expansion candlestick, it is long, and then we have number 3. Number 3 here again is closing below candlestick number 2. So when it closes like that, it is indicating that there is something left behind, that it has to come and fill before continuing with the direction it is going. So this is the fair value gap. The price will come back inside there and then continue with the trend like that. So if you master this fair value gap well, then you're going to have a very easy time trading. Can you look at the charts? I'm going to look at GBP USD. Normally I trade using 4 hours. I'm an intraday trader. So we are going to look at GBP USD. From where the trend, we can see clearly the trend is bullish. So I'm looking at where the trend started. It started from here. When you look at this movement, let me just enlarge it. When you look at this movement here, when we started, there was no imbalance until here. There was an imbalance here. When you look at this imbalance, we have candlestick number 1 here, number 2, and then number 3. Number 3 is closing below candlestick number 2. So what happened? Price came inside, filled the fair value gap, and then it continued with the direction. Again, we can see here you can see that we have candlestick number 1, number 2, and then number 3. So what happened? When you look at candlestick number 3, it is closing below candlestick number 2. So the price came, filled the fair value gap, and then continued with the direction. And then we have this one again. There's another one here, very small one, small fair value gap there. So when you look at that one, we have candlestick number 1, number 1, 2, and then 3. 3 is also consolidating. So the price came back inside, filled completely the fair value gap, and then continued with the buyers. And then we have another one. These opportunities are so many, but you have to be careful. You have to have a lot of patience and wait for them to form. So we have a lot of price action here, but eventually the fair value gap was filled and then the price moved downwards. And then we have another one here. Told you the opportunities are many. So we have candlestick number 1, number 2, and then number 3. When you look at number 3, it closed above number 2, but candlestick number 4 did not leave any imbalance. It completely filled the imbalance. That is indication that still the price is coming back here before it continues with the direction. So it came, filled the fair value gap, and then continued with the direction. I can find another one also. Let me check. We can also say this one here. We have this. Yeah, still this was a valid trade entry. So here we have candlestick number 1, number 2, number 3. Number 4 came back, tested into the area, and then it pushed up. That one is enough to give you a very good risk to reward ratio. And then we have another one here. Can also use this one. Here we had a very small fair value gap here, very small, but still the price respected it. It came and then pushed up. Also we have this one. So here you can see number 1, number 2, number 3 consolidated, price came and then pushed up. So you have to just have patience in the market, and this thing you will see them. We'll continue in the next video.